really legitimate question. I just got it in the other day. So my 1099 contractor filed for unemployment and told the state that she was actually an employee. Okay. Now, one person that completely disrupts everything you're doing because they told the state that they're an employee. Now you got a workers' comp audit. Okay. This is very, very, very common. And the reason why this is sometimes becoming such a big issue because the states have put in so much regulation around 1099 workers. Like a state of California, like many of the states now, but I'll give you the example. California is my home state that, I've done the most work in, right? Not that I haven't done in other states, but I'll use California as an example, just because of that reason. So California, when you hire a new 1099 person, you have to report that I hired a new 1099 worker to the state. Now, the state has various pieces of laws in effect that if you are hiring a person that is doing that job only for you and they don't have a business that they service other people or other businesses like you, they would be classified as an employee. So even though, the same person in a different state could potentially be a 1099 worker, California will almost force you. It makes it so difficult for you to prove that that person is a, contractor versus an employee, right? So why is that important to you? Well, that is very important. One, because if they're a 1099 worker, you're not paying any income taxes, you're not paying any Social Security, you're not paying any Medicare, right? Again, this doesn't apply if you are the employee. So I've seen so many people who have their own companies, single member LLCs, and they pay themselves 1099. Now, if you pay your spouse a 1099 and your spouse goes and files for unemployment, I mean, really? I know people are very creative. Like, have I seen a lot of different things like that? Yes. I wouldn't go to that extent saying, hey, I hire my spouse and now my spouse can collect unemployment. Okay, don't be that person. I don't think that makes sense. Unless you get divorced and there's some other things that are, in place at the same time. So now what is the state going to do? So now the state, if they classify you saying, hey, you know what? Your 1099 people are being audited to see, are they truly contractors or should all these people doing work for you being employees? Okay. So here's the myth that goes around. If I hire a person, I agree to pay them, on a 1099 basis. I do get a W-9. They agree, I agree, it's a deal. The IRS doesn't care what happens afterwards. Well, that's wrong. And this is where we've seen a lot of the states like New Jersey, New York, California, Illinois, Massachusetts. There's some states that will give you a really hard time because the IRS uses control tests. How do you control how the work is being done? So if I'll give you an example. If all my people, I provide a computer, we're a remote company. If I provide a computer, if I provide all the tools for the person to do the job, and I can dictate when do you come to work and when do you leave, or how do you have to do the work that you're doing, there's most likely going to be an employee. And what's the biggest issue for income tax purposes? For income tax, they can come back and penalize me as an employer saying, hey, you know what? This should have been an employee. And now what they're doing, they're going back in time and saying, hey, you know what? We're going to penalize you for not paying, back taxes now for FICA, for unemployment, workers' comp premiums, state, misclassification fines. So this could end up being $5,000 to $25,000 per worker, right? So huge. We see a lot of audits coming up lately just on this classification alone. Again, we're not even touching the hiring people overseas. Okay. This is just local people or domestic people in the United States. Okay.